Hi, my name is Tom Dixon. I am the founder and host of the Financial Experts Network. This brief video features a discussion with student loan expert Heather Jarvis on this very important issue. Heather is one of the many experts I've relied on since I started hosting webinars in 2008. Our financial experts have drawn over 150,000 financial professionals with education and ideas that helps them provide better advice to their clients on important matters such as the best ways to improve your FICO scores, or perhaps making sure you understand all of your options around student loans. Now, my goal is to make our experts available weekly to more do-it-yourself investors, perhaps like yourself, by posting highlights of our webinars that can help you make more informed decisions about your money. So, please feel free to subscribe and then click on the notification bell to make sure you get notice of all the new videos we will post on a regular basis. Now, who should subscribe? Any do-it-yourself investor, whether you're in your 20s, 30s, 60s, at any age, we will have content from true experts that can help you make better decisions about your money. In addition to listening to this video, I invite you to use the link in the description box to visit our website, financialexpertsnetwork.com, to register for any of our live webinars, to include one I am hosting with Heather on August 26th. I hope to see you on the live webinar, and please feel free to give us a thumbs up once you listen to the video if in fact you find it helpful. And of course, if you have any questions or comments, go ahead and post.
Well, hello everyone. Tom Dixon here, your host of the Financial Experts Network webinar series, and I'm delighted to have student loan guru Heather Jarvis. So folks, we're going to focus on three things now as we think about what you should be preparing for as the end of the payment pause is going to happen sometime, right? It has to end at some time. All good things come to end. We're looking at February 1st, 2022, when you will have to restart making your federal student loan payments. But what can you do in the meantime?
So every lender of student loans, including the federal government, hires a company to administer the loan. They send us the bills, receive the payments, and those companies are called servicing companies or loan servicers. And so it's important that your loan servicer know where you are. So it's wise to update your contact information, check and make sure they have your right address, email address, phone number. And also, if you're not sure which company is your loan servicer, because they can be changed now and then, we'll get our loans transferred between them. It's smart to look up who your loan servicing company is. And you can do that online at studentaid.gov. If you're not sure who your servicer is, you can also call the Federal Student Aid, and their number is 800-4-FED-AID, and just ask who your loan servicing company is and get their contact info that way.
Great. Okay, wonderful. So again, number one, make sure you identify and you understand who is servicing your loan. Heather's given you two great resources for you to do that. By the way, I will also share, we have a checklist that we put together. Heather was kind enough to help me develop a checklist. If you're interested, make sure you check the links in our web page here, our YouTube page, to get access to that checklist. So now, second most important theme here for now during this payment pause period is to really document what kind of loans do you have. So again, Heather, if you could add some comments to that, please.
Sure, it's important to have a clear inventory of your student loans, and you can accomplish that again by visiting the studentaid.gov website, logging in, and you'll see a whole dashboard that will show you all your federal student loans, including your principal balance, your interest rate, your loan servicing company, as we mentioned before. If you also have private student loans, a second step is to pull a copy of your credit report, which can be accessed for free at annualcreditreport.com. And if you compare the loans that you see on the federal website to the student loans you see on your credit report, anything on the credit report that's not also on the federal website is going to be your private student loans. And it's important to keep track of all the loans you have, because it's not unusual to have 2 or even 3, sometimes maybe 4 different kinds of student loans for each semester that you're in school. And they all have different repayment provisions, different opportunities and options for forgiveness. And so getting a good inventory, as you say, Tom, including things like what your interest rates will be once interest resumes on federal student loans, is smart to do now while payments are suspended.
Yeah, absolutely. And great advice around the private student loans. Thank you for mentioning that. I lost sight of that with, again, annualcreditreport.com. That's, again, a great thing to do. Now, let's talk about the third theme here for those listening. You know, generally you might be in a situation, one of two situations. One, you might be doing just okay and you're doing great with your income and your ability to make payments. And then unfortunately, there's all too many that may be struggling to make their student loan payments. So let's start with the first group of folks that might be fortunate enough, everything's going along well, their jobs are doing well, their income's still the same, if not improving during this trying time. What kind of ideas should they consider as we look at February 1st, again, kicking in the meantime?
Yeah, well, it's smart to keep your finances in mind in a holistic manner. So student loans are an important part of that, but you want to think about things kind of more generally. So if you're someone who's doing well, you have your credit cards paid off, you have at least some savings in the bank, and your student loans are your only outstanding debt, this payment suspension is a unique opportunity to reduce your principal balance on your student loans in a way that is trickier to do at other times. So because interest has been set at 0% on these federally held student loans, the balances are not increasing as they normally do when interest is accruing. And so if you've paid all the interest that's already accrued, this is an opportunity to reduce the principal balance, which is the interest-bearing balance of your loan. And that can really help you save money over time. But do be aware that if there had been interest accrued and outstanding on your loan that it had not been fully repaid yet, any payments you make go first and only to that interest until that is repaid. So it's only once that's paid off that you can then attack that principal balance and really get that reduced.
Okay, great. And then do you suggest, Heather, that folks that are making extra payments or payments during this period, that they should verify how that money is being applied to principal or interest, looking at their statements or online?
Yes, that's right. And most of the loan servicing companies now do allow you to direct your payment rather specifically through their websites. So not only, as you say, Tom, do you want to reduce your principal balance, you also would be wise to pay down the loans you have that are at the higher interest rates. So while no payments are required, if you just send a payment to your loan servicing company without giving them more direction, they'll distribute that payment across all the loans you have based on the balance of each loan and what that contributes to the whole. But you'd be better off saying, hey, put this money to my, for example, Grad Plus loan, which would be at a higher interest rate than, for example, a direct unsubsidized loan would be.
Great, great. And by the way, so whether you're a believer in debt avalanche or debt snowball, the only way you can really implement that theory, again, whichever one you prefer, is by taking an inventory, as Heather had suggested, of all your loans, understanding the interest rates. I think it's important to understand the maturity dates relative to whatever debt strategy you want to implement. And then if you want, take action. So again, if you're making prepayments and you're looking to pay down your debt as quickly as possible, and God bless you if you are, then again, let's get a full list of that and make sure you attack it with a plan. Now, for those that are struggling, Heather, during this, especially during the pandemic or at any point in time, they could either be unemployed or maybe they're working in an industry that's been hit terribly by the pandemic and their income has gone down, for whatever means, again, what should they always be thinking about, and specifically during these times?
Well, the good thing about federal student loans is that they do tend to be quite flexible. So we often have options for either reducing or postponing payments. So if you're someone whose income has gone down, if you have become unemployed or underemployed, you can consider a deferment, which is a temporary postponement of your obligation to pay. You could apply for that. Or a forbearance, which is just a different word for a similar postponement of payments. You could apply for that come February when payments resume. No need to do that beforehand. But another option that could be even better for a lot of us is to think about the income-driven repayment plans. When I say income-driven repayment, I'm talking about a collection of different repayment options that the federal government offers student loan borrowers. There are several different ones. They have subtle differences and a lot in common. But what's great about an income-driven plan is that it fixes an affordable monthly payment based on how much you earn rather than how much you owe. So people with larger family sizes are permitted to keep more of their income before having to send a percentage of it to the student loans. So thinking about enrolling in an income-driven repayment plan before the payment suspension expires is a good idea. And you can do that again at that same website, studentaid.gov. You can go to the Manage Loans menu and then click on Apply for an Income-Driven Repayment Plan.
Great. And by the way, if your loan servicer, if you contact them and express interest in changing plans to something like an income-driven repayment plan, are they also charged with helping you evaluate your options?
Yes, that's right. So contacting your loan servicing company is another way to get information. You can talk to them about the different repayment plans that you are eligible to choose. And it can be kind of complicated to get to the bottom of that. There are all these different plans, and sometimes the eligibility requirements are rather tricky, have to do with things like when the loans were dispersed or what your income is relative to your indebtedness. So working with your loan servicing company is one option for getting that information.
Great. All right, wonderful. Well, great. We covered three very important factors to consider that really everyone should be thinking about during this time where your federal student loan payments are paused. And just to make that point clear again, the loans that are eligible for this payment pause are the federal student loans. Those are ones that are owned, originated by the Department of Education of the government, not private loans. So just to make that, and again, Heather, if you want to comment on that, please do. But I think sometimes there's confusion around that.
Yeah, I'll just add one thing to that, Tom, which is you're right, private loans are not included. And private loans can include loans that are issued by states and nonprofits and can include the loans issued by, for example, your educational institution. And also, it's only federally held student loans that have been subject to this payment pause. There are some federal loans that are commercially held. As you mentioned, federal loans that are originated by the federal government began their lives as direct loans. So those are all federally held loans. But there are some loans that were originated by banks and private lenders within the federal system years ago, and many of those loans remain in commercial hands, although some of those loans have been later transferred to the federal government. So by now, most borrowers will know whether their loans are subject to the payment suspension or not. But certainly private student loans need to be treated differently, and a whole separate strategy for repayment of those is smart.
Great. Thank you so much, Heather. Really appreciate you taking the time to share your expertise.